Teresa, this tells me that you see this market as yet to find a bottom.
I think that's absolutely right. If you think about the Fed and the target for them in terms of inflation is, about 2%. And we do think that, real rates have to be positive. And at this rate, with the 10 years still below 2%, is still relatively expensive.
Where do you find opportunities then? What kind of levels would you be looking at before I guess you would not see that risk of more upside surprises for yields?
At this point, I think one of the key things to look for is whether or not the Fed does have inflation under control. What's really fascinating is the fact that 10-year break-evens have actually started to come down from 3 months ago, meaning that the market is actually giving the Fed some credibility in terms of its ability to maintain inflation. But let's remember, they're still really between a rock and a hard place in terms of trying to maintain inflation and still trying to figure out if labor participation really is at the level of where it needs to be from 2 years ago pre-COVID. So I think it's a moving target, but fair for 10 years, probably somewhere between 2.25 and maybe 2.5.
And of course, as we continue to see these volatile times when it comes to rate hikes from the Fed, when it comes to the credit markets, what should we be watching? Is there any part of that space that we should be talking about more right now?
Well, I think we spent a lot of time talking about high yield, especially, China property, which I think one of your commenters have mentioned before is actually, sold off a lot. One area of biggest risk really is investment grade, right? Because investment grade has so much more duration risk, i.e. is so much more sensitive to interest rate hikes that, maybe that there's actually more spread widening there. Whereas high yield, especially in pockets like China real estate, there's been so much sell-off from last year that we actually think that we might have reached bottom, and starting, the middle of this year, we may actually start really seeing sentiment turn.
What are you expecting to see in the property space in China this year? Are we going to see more consolidation given the price pressures, and what should we be watching when it comes to the latest market moves?
I absolutely believe that there will be more consolidation. And we're already starting to see that. So there has been asset sales, especially from the more distressed real estate developers. And what's actually been quite heartening to the bondholders is the fact that they've been able to sell these assets at above book value. And I think for the buyers, it's a great opportunity to buy land as well as projects on a relatively cheaper basis. And so while we don't think that we're going to see, huge growth, especially in the first half of this year because of base effects, we do think that base effects will become more favorable middle of this coming year. As a result, we do think that China property is actually going to be going to actually recover from here.